Yeah, you're gonna have to excuse me if I don't get back to your questions or whatever. But yeah. Um, yeah, I don't know, mate. Like he's not answered his phone and he was out last night. So yeah, it's definitely a possibility. Um, yeah, I reckon, mate. It's one ticked me on WhatsApp as well. So yeah, they stole his midget card. Exactly. So cool. There's actually like this bit of price action all here, right, is actually quite a good basically if we take this push to this drop is quite a good example of order flow and how yeah, like how it's respected, how it works with structure, stuff like that. um so right, if we uh, where's the fucking replay tool? Fuck, I hate doing this on my laptop. Can't all you lot just buy ultra wides? Like it make my life so much easier. Um, right. So if we're coming into here, for example, right, we can see we've clearly got bearish order flow, right? All right, let's maybe do it at its basics, right? All order flow is, right, is price respecting ranges essentially, right? So we're gonna have like structural things like this, right? But within this, we might get like bearish order flow here. Then we get a switch to like bullish order flow here, right? Then we get another switch to bearish order flow here. Then we get a little reaction off this, but this follows through because the structural play is bullish, right? And it's why it's important to always know that order flow at times, like those ranges will be used as liquidity, at times they'll be respected, and it's all to do with like alignment and shit like that, right? Like if you've got everything bullish, right, likely, like here for example, right, if this was bullish structure, likely we wouldn't see this, right? Likely we wouldn't see a run on this low because price would just respect the bullish order flow until it takes the weak high, right? That's normally what happens. But yeah, anyway, right? So here we can see that our last like supply range is this, right? It's the last price contained between 2 points that breaks the low. For want of a better word, it's range initiation mitigation. But yeah, you know how much I dislike that phrase. Yeah, so now we start seeing, right? Okay, cool. Price has broken this, right? You know, like even down here, we can still use like order flow to our advantage because we can say, okay, well, price has come up and respected. I mean, here you can see, like, and this is what I mean about price never fucking reacts off imbalance ever, right? It's always something, right? Like, look, there's the range, right? That's the last large buy to sell that breaks the low, right? So that is in effect our whole supply range, right? Not here, not here, not here. This is in effect our whole supply range, right? Price comes up, respects it. And then we see another shift in order flow here. We see this little range come down. What happens here, actually? Well, this would be on seconds. We can have a little investigate. Yeah, and here you can see it quite clearly, right? Here we get like a little shift in order flow because this range here, right, is taken out, right? So we know that in essence, this is some form of demand, right? We don't know the validity of it until it comes and reacts to it. Like price could just come and take out the low. It's unlikely because we run a weak low and all of that sort of shit. Whereas, yeah, this whole range anyway. But yeah, right, and then price comes in and gives us another shift in order flow, right? Comes back down, we get a correction here, and there's a textbook entry, right? Then price just starts respecting that bullish order flow, right? Like this is another range on a lower time frame. Price respects this little range, pops, right? Creates another little range here that reacts to the high, pops, breaks order flow here, right? But then returns to bullish order flow, and it's why it's important that structure is always the main driver behind the idea, right? Because essentially, I suppose the best way to describe order flow is lower time frame structure, really. But really, everything is order flow, right? Because like 4H structure is just daily order flow for want of a better description, right? Yeah. So yeah. Okay, cool. Let's go back onto the higher time frame and see what happens. I'll take questions at the end, mate. I'm not going to do them in the middle. But yeah, cool. So price starts pushing, right? Creates another sell to buy range here, right? Another sell to buy range here. You can see that through all the wicks. So again, if we go down time frames, you can see what's happening, right? Range, pop, mitigate, range, pop, misses the mitigation. So, you know, now we have an unmitigated range, so we may get like some form of reaction off there, or this range hasn't really been fully mitigated and it's created equal lows, so we may get a run into that or something. You know, there's always various factors. We get another range here. All right, price respects it. Does it give us a shift in order flow? It needs to take out that high, which it hasn't quite done yet. Now it has, so that high in theory should go, but we never know. I mean, it's Asia session and spreads and all of that, so yeah, we don't know at that point in time. But yeah, it comes down for a deeper mitigation of that range, right, and then pops, right? Price, yeah. See, and you see how we've never broken like the top of this range yet, so we don't know effectively whether this is going to hold at this point in time, right? Because we haven't got an area to trade from at that point in time, right? So that gets run, yeah, blah, 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 blah. Let's just see what happens in here. Yeah, that gets respected, right? So now we've got another range. All right, so anything within here is sort of fair game, right? And it's just like all it is a higher time frame POI essentially, right? Okay, cool. So now we get this range here. This gets disrespected, right? From an extreme over here, right? So we can do two things here, right? We can look for this, like a buy from like here or wherever, right? To look at that, but we can also say, okay, well, price has disrespected this range. We get some form of correct PA in here, right? We get a little internal range here. This respects that. So what we can do is if we get another shift in order flow here, right, we can play the long, hedge the short, or hedge like sell to buy in there, right? Okay, cool. We get another break of a range here, right? You see how price is contained within these 2 points, right? We get a high, get low, that gets taken. So we've got a shift in bullish order flow, right? So we can probably, if someone's drawn a blue box, can you just remove it, please? Yeah, can we not do that, please? Thank you. Like I'm not in the mood today. Yeah, and then yeah, so here we could say, okay, well, you know, yeah, we could potentially short from here. We've also got this smaller range here that we can look to get long from. So if we haven't managed to catch a short here, it doesn't look like there's anything really valid because this is already broken range, so we don't have a refinement, right? So yeah, what we can do here, right, is we can say, okay, well, we've had another shift in order flow, right? So likely what price is going to have to do to complete its objective, right, is come into here, right, and either continue to push the highs, right, or do this, right? So we can take this, the buy here, right, and then we can look for the sell, right? Cool, price comes in, there's a nice like lower time frame entry here just on these mitigations, right? You can even see here, like we create this little range here, we take it, we start creating other ranges, bullish order flow, right? Respected, respected, right? So, and then we can look for sells from up here if we get another shift in order flow, perhaps, right? Price continues to rally. Does it give us, you know, like I say, let's say we took a long on this mitigation or something, right? And here we can just hold this, right, and say, okay, we do have some form of bearish intent in the market. We've seen a 15-minute shift in flow. We've also seen a 1-minute shift in order flow from there. We're well within our rights to look for shorts from there, right? Yeah, we're well within our rights to look for shorts from there. Price continues to push. Do we get a shift in order flow from here? No. Right. So we don't take a short. Right. We just let the long continue to run. Right. But say we did get a short from here. This is like a perfect example of where you'd hedge. Right. You'd just go, I'm not 100% sure on the market's intentions right now. I will take a sell here and I will take a buy here, right, to cover both sides of the market, because everything is yeah, mate, I can see you raising your hand. Like, it's I'll do questions at the end. I'm not going to do them during. Okay. Yeah, that's not annoying at all. And then yeah, the market continues to push, right? And then we start seeing, okay, now what happens, right? Because here we have a little range. Does this get respected or not? Right, it might come a little bit lower into one of these. These are all, like, again, if we go down, right, all these little wicks are ranges, right? Right, so it might run like these equal lows into this, or yeah, who knows. But it shouldn't disrespect this. If the bullish order flow is going to continue, we get another shift in order flow, right? And yeah, it's just looking at like the more minor structural shifts, essentially, within these, right? And then what do we see? Okay, so you know, we potentially got a long from like here, right? Quick scaling, whatever, right? Price again pushes the high, right? Comes back down, respects this. We never shift order flow here, right? No, we never shift order flow here. Well, I don't know, sort of technically you do, because you take out this little range here, but yeah, it's very minor. But again, you can always look, like, you can say, okay, well, I've got two valid areas, right? I've got this area for longs and I've got this area for shorts, so I can look at both again, right? Yeah, market continues to create new highs, right? And now what do we see? Okay, well, where's our last significant range? Well, it's this, right? This sell to buy hit, right? Market breaks that, right? Cool. Okay, so now what are we looking at? Well, are we going to look at this demand, this supply level? Well, no, because it's not reacted to a previous range, right? So it's not really valid order flow as we would define it, right? So we're either looking at this, right, or this. Right, and the market doesn't really matter to us which one the market respects, whether it does. And we still got, right, this higher time frame order flow hit as well, right? Like this will be like 30M order flow or something like that, right? So we can still take longs from here, right, that continue to run up, but we can say, okay, again, we've seen a shift in order flow, so we can wait to see what happens. Okay, this one we never get a shift in order flow away from, do we? No, we never get a shift in order flow away from this. Okay, market pushes up, right? Comes into the extreme. And then, like, this is a significant shift in order flow, right? As soon as this happens, right? Oh, fuck off. As soon as this happens, what does this make this low? Right? Well, this makes this low weak, right? And likely to get run. So longs here are more likely going to be pullbacks to continue shorting, right? Because, you know, we're at high prices. We've seen a run on liquidity followed by bulls just being crushed, right? So yeah, then we see this, right? And then look here, we get another shift in order flow. Right. So this, I was speaking to someone earlier and saying, you know, this just gets, yeah. I was speaking to someone on Friday and they were saying, oh, well, I can see it going higher. I was like, well, we've seen a shift in bearish order flow and we've seen a shift to bearish order flow from there, right? Likely it's going lower. It's likely not going to continue at that point in time, right? Because all we're seeing is bearish intent, right? The market deliver a lower time frame strong high, for want of a better word, right? A supply range, whatever, and then we see a shift back. I mean, we never go bullish, right? We never see any bullish order flow there because that, unless that's an inside bar, which it doesn't look like. The low of that is 32.5. The low of that is, yes, it's not. I mean, there's going to be a range here. We could say this is a little shift in bearish to bullish order flow because we can see a range here that gets taken out, but it's not M15, right? But then we see this M15 range get taken out, bearish all day long, right? That's just going lower. Like that's literally it, right? Cool. Again, market shifts, and here you don't even really need to wait for the M15 because you've got M15 bearish order flow here, right? So now what do we see? Well, now again, right, we see this supply range here created, right? We can obviously refine this to things. This candle makes a lot of sense. It's the run on liquidity. It's the one that breaks structure. It mitigates this that breaks the original structure. We don't really have anything valid up here. We just have this wick essentially, right? So yeah, and here we don't really need to see a shift in M15 order flow again, right? And then we see the market move down, right? And now it's just trading towards a weak low. That's all it's doing, right? So what's it likely to do? Well, it's likely to respect the supply ranges, right? Supply range gets respected, right? Another supply range here. Market respects that. And then, yeah, just dies. Right? But yeah, does that make sense to everyone? Like how order flow works, right? It's just looking at the smaller nuances in structure, for want of a better word. You know, that's basically it. How does everything seem so logical when I explain it? I don't know. It just makes sense to me, brother. Like, yeah, it's just like I see the market in a very logical way, right? Like it's like a lot of people see it as fucking, oh, we've got all of these different fucking things stacked this way, that way, the other way, blah, 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 blah. All we're seeing, right? And no matter what anyone fucking tells you, if they tell you anything different, they're talking complete and utter shit, in my opinion. All we are seeing is buy and sell orders delivered to the market, right? A correct buy order, right? Like, or the way we define a correct buy order, right, is we like to see a range formed via a run on liquidity, right? And that is a buy order. Yeah, exactly. Right? That is the market moving down to fill buy orders at lower prices and initiating out the higher range, right? And that's it, right? Look, hit, right? Formed via run on liquidity range gets short-term respected. This range is formed via run on liquidity, well, a large run on liquidity to the left, right? This range is formed by a run on liquidity. This range runs this high. This range runs this high. It gets respected the whole fucking time. Like until we should be able to see where that comes through like various other things, right? That's why, like I was saying, as soon as I saw like this lower high form, right? It's like, well, likely none of this is going to hold, right? Like, because all of this is weak, right? It's all poorly formed, right? There's no large run on liquidity here. Where are we trading away from? We're trading away from these two large runs on liquidity, right? So the next place, if we're going to see longs, which, yeah, I don't know at the moment, it's not looking great for the bulls, but we will see. You never know, right? Because we haven't hit the extreme yet. And this, again, this range was never mitigated, right? And it forms correctly. You see, like it's this formation again, right? Runs low, runs high, off it goes, right? So we may see this respect the extreme, give us like a shift in M15 order flow, and then we can trade to take out these highs, right? Because this area is clearly well formed, right? And as we would define it, nothing has broken swing structure, so the whole fucking thing's weak. And yeah, like at this point in time, it's a little bit difficult to sort of know, but yeah, that's basically it. Right? Make sense? Cool. Perfect. All right. Salvatore. One sec. Yeah, go on, mate. Far away. You should be able to. Hello.
Have a good Sunday, folks, everyone. Good day, brothers. Look, my question is, when you're talking about order flow, when you're talking about order flow, on which time frame do you refer? 4 hours, 1 hour, 15 minutes,
Anytime.
15
Anytime.
seconds?
Anytime. Anytime.
Right.
Or like everything, it's like this is another really important thing to understand, right? Anything we talk about, literally anything, is as applicable to the 1 second time frame as it is to the yearly time frame. The market's fractal. It does the same thing on every time frame, right? We just use like the idea of what we do, right? Multi-time frame analysis and being good and precise with that, right? Is that we see these, is that we see, right? Like one way we may take a trade, right? Here we have 4H being bullish, right? So we are expecting a lower high, a higher low from here, right? So then what we would wait for is M15 here to either shift order flow or structure, one or the other, right? And then we will see the shift in order flow. So then what we're expecting is another higher low from here, right? So then what we can go down to 1M, right? And we can say, okay, we're seeing 1M deliver bearishly into here, right? Okay, 1M breaks order flow, right? So here we get a little valid demand level or whatever. Now here we can see 5S, right? Realign order flow there. And there you go. Right? Like that's the whole idea. Like time frames are irrelevant, mate. Literally irrelevant. Like anything I talk about is as applicable to a really high time frame as it is to a really low time frame. Yeah. Like that's the whole idea of multi-time frame analysis, right? That we can analyze the market on the lower time frame so we can get smaller areas of invalidation, right? And more confirmations, increase our win rate and increase our RR. That's the point, right? That's why we teach the way we teach. Yeah, alignment's fucking, yeah, like it's boss, mate. Like, yeah. Like it's just, we're just trying to pick the point that the market turns, right? Because that's like, it's why I like reversals more than continuations, right? Because for me, this trade here, for instance, right? I don't have to make as many decisions within this trade because say this whole thing, right? Like all of this plays out like
inverse
right here, right? Like we see all this shit here, right? And I've caught the higher low, right? Here, I don't have to fucking manage this trade, right? This trade just goes and does what it does. That's my management, right? Like partials at that high, right? Say we see something more like, you know, here we're respecting this, right? Say I get in here, for instance, right? Here I have to make a bunch of decisions, right? Where am I going to target this trade? Because you never know, we might have seen like an M15 shift in bearish order flow here, right? So we may see this respected and come down to here. That would be the idea of hedging, right? And this may come down to get something in here and then, yeah, fuck off and then do whatever, right? But this trade here, if you caught the higher low, this trade should be protected because the structural objective is the weaker. Basically.
That's easy. It looks so easy when you explain the things.
Well, it is easy, mate. It's just You have I have been trading this, right? Just these models for the best part of a year now, right? It's all I've looked at, nothing else, right? Of course, it's going to be easier for me than anyone else, right?
Of course.
It's time, mate. That's it, right? It's time and it's application, right? It's seeing it play out hundreds and hundreds and hundreds of times, right? And understanding that, okay, this is what's happened. This is what happened. Obviously, like doing this back testing, right? Like over bar replay is always easier because, of course, you know the outcome, right? Like,
of course.
So it's always going to seem a lot more logical when I explain that. But that's why I'm trying to say, you know, like here, right? Say we're getting in long here, right? There's nothing wrong in looking for a short from here, right?
Of course.
Like we never know, right? We just build probabilistic, you know, 80% chance, right? That, or well, it's about an 85% chance that EOS continues, right? But this is bullish. So really, we should see this higher low respected and create a new higher low, right? It's why I was saying here that this is a valid area to hedge from, right? Because the extreme hasn't been mitigated. This low is always getting run, right? Like always, right? But it's why in that diagram I sent, I was like, here is the valid hedge, right? Because this is the extreme, right? This could do that. We don't know at that point in time, right? So yeah, that's why I took a hedge from, right? Because it's like, where may the market move against me, right? Like, where's the probabilistic area that the market could potentially take me out of my position, right? Because I mean, at that point, I had two shorts running, right? I'd partialed them, like, this is something I'm working on, because really I shouldn't have taken any volume until they ran this liquidity, but that's neither here nor there, right? Yeah, exactly. Like literally that, like what that guy just said. Yeah, this that thing in the chat. But yeah, like here, right? It's like, okay, I have open risk on this, right? From an order flow and structural perspective, what am I seeing at the moment, right? Well, I am seeing that we have a large demand range, right? That has, to a degree, created inducement potentially for the extreme, right? So this extreme has not, I mean, the low is weak at that point because it has failed to create a high and we are seeing bearish order flow, right? So the probabilities of that turning around and taking out the high are probably like 30%, something like that. Will happen 1 out of every 3 times, maybe less, maybe like 1 out of every 5 times, right? But it's still a potential outcome, right? So I want to cover all the potential outcomes, basically, right? So I don't want to have this here, which is running, you know, with a 1 pip stop, that's running fucking, well, 1 to 30 there, right? If I managed like really well and I still had full volume on this, right? I don't want to see that 1 to 35 just go to break even and me not be in the buy, right? So I'm going to take the hedge to take out the high potentially, right? But then you see the hedge come back in and start to distribute at the demand range. So you close volume on the hedge and you let the short play out, right? Make sense? Good. Yeah, does anyone have any sort of questions about this sort of shit? No. Cool. That's good. Yeah. Yeah, I wanna try and remember we were having that conversation about that bot the other day. So I want to try and hook up a call next week because I'm probably not going to trade that much next week because it's the week before Christmas, so it will probably be quite low in volume and all of that sort of stuff. And yeah, just take a fucking week off, sure, you know. Enjoy a bit of time, back test, build some case studies, all of that sort of stuff. But yeah, I'll try and maybe we'll try and do that for one of the pre-New York calls or something like that. I'll message Loki and see what he's saying. But yeah, cool. All right, guys. Well, have a lovely Sunday. Yeah, that's like generally speaking, it's like, oh, sorry, in aspects of structure, what do you think where we are right now? Year and position. Me, no fucking idea, mate. No idea. Literally not, like a lot. But yeah, I don't know. I don't really count it anymore, mate. Like I just find that we, like because so the R right is not a good indicator for actual return on investment because you pass all your trades and all of that sort of shit, right? Like so yeah, it's generally not the best form of indicator for things. Yeah, I explained hedging. Yeah, cool. Yeah, exactly. Percent is much better, mate. But yeah, I just take a look at my P&L for the end of the month, mate. I don't really bother counting percent or anything like that because all we're doing is making money, isn't it? Like it's like any other job. Do you count? Say you were a fucking waiter or whatever. Do you count your percent gain in a year? Like, yeah, that's my view on it anyway. Yeah. But yeah, cool. All right, guys. How do you combine structure phases when deciding structural? Well, that's all that's like that's just going like, right, okay, we are bearish here, right? So I'm expecting a pullback, do a continuation. Right? Like here, I'm expecting a pullback, here, I'm expecting a continuation. Right. So here I would be expecting a what is that? A lower low. And here I'm expecting a lower high. Right. So it's always like that, like figuring out like, okay, where is this trade coming from within the range? Okay, we've seen a structural realignment here. Yeah, that I'm expecting a continued push to form a lower high. That's the trade you want. Yeah, just always do it on like it's always on like work down timeframes, right? So first of all, I'm expecting a lower high on daily, cool, but I've just had a 4H bar to bearish structure. So yeah, maybe I'm expecting a pullback on daily, but I'm still like the overall structure idea is I'm still expecting a lower high, but I can trade back to that lower high. Right. But yeah, cool guys. Thank you, mate. Yeah, have a good one, guys. I will speak to you all later. Take it easy. Bye.